Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. You know to go ahead and hit that like, subscribe, and notification bell. Josh and I have been pounding it out at this desk for you guys, giving you guys the best information all day today. We went live this morning with the CPI, Consumer Price Index. Josh filmed one for his page, and I will leave that video at the end of this video, all right? And so I want you to go over to Stocks with Josh, watch the video. He talked about crypto, and we go back and forth, and we do it in a way to give you as much information as possible. Anything I say is not a suggestion for you to buy, hold, or sell, all right? Listen, we had CPI numbers. It came out, everything came out as expected. Let's take a second and just listen to the CPI numbers.
Rick Santelli has it. Rick, what is it?
Yes, our December read on PPI, expecting a headline number to be down 0.1%. It delivered. It's down 0.1%. High water mark, June of this year at 1.3. That was the highest since 2005. Strip out the all-important food and energy, it's up 0.3, exactly as expected. And that up 0.3, how does it compare? High water mark in this series was April of 2021. It was up 0.9. That was the highest level since 1981. Let's go to the year-over-year consumer price index. Expected up 6.5, exactly up 6.5. High water mark June of this year, 9.1. This is now the sixth consecutive lower month, and the high water mark goes back to 1981. Finally, in my opinion, the most important metric, CPI year over year, X food and energy, known as the core. Expected up 5.7. All four of them exactly as expected, up 5.7. And high water mark September of this year at 6.6. This marks the third consecutive month that this metric is lower. And as you look at what's going on here, interest rates, well, they moved a bit lower. Now they're kind of hovering a bit. But the fact of the matter is that for whatever reason, the equity markets are going lower. Interest rates have moved off of their best levels. And I think that the reason is that we're still looking at numbers that are a bit sticky. And I think expectations is something we, the insiders, pay a lot of attention to. But in the final analysis, I think the issue is that many would have liked to have seen it maybe a smidge lower. Let this thing simmer. I think my opinion is you get a lot of cross currents based on what positions investors had going in, what they're trying to put on now. But ultimately, I'm not sure if stocks are going to be that much lower as the Dow futures indicate. And do remember, stocks were trading at the new highs of the week before this number, and interest rates were trading at new lows for the week before this number. I think that about covers it, Joe. Back to you and the panel.
All right, good people, you heard it. That was the CPI number. Everything was expected across the board. There were no surprises. Of course, all of the indices, Dow, S&P, NASDAQ, dropped 200 points. Then it went up 200 points. You guys are used to this roller coaster ride. It's the same thing every CPI number. Goes green before the information, drops, then come back. And at the time of shooting this, we still don't know what the outcome is going to come by the end of the day. Reality normally hits the next morning because the markets have to digest all of this information. Just as a side note, I know there's been a lot of Monday holidays, but there's another one coming this Monday. All right. So the markets will not be open this Monday. So that'll be like 3 Mondays that the market are closed within a month's time. What do you got to say, Josh?
Well, there's been a lot of questions about the direction. I think right now it's very mixed. The market's gone up, it's gone down. The SQQQ is up almost back to 48, getting very close to it. The S&P 500 is around 39.69. I think that if we continue to move up, a very likely area of resistance is going to be right around 4,000. It's like 4,005, 4,009, right in that range. And then we're going to hit the same wall that we have hit about 5 times previously and been rejected at. So it would take a lot of momentum to push this market above that 4,000 range on the S&P 500. But I want to quickly share with them, some people have been getting introduced to the inverse ETFs. the SQQQ, and
And the
the TQQQ. And one of the guys or one of the ladies in the chat group that I have over on the Moomoo app did a nice little chart to help people understand the options and the direction that those are going to go, so that some people don't realize. I've had people who have jumped on a trade and they thought they were going long, but instead they took a short position. And I've had people taking a short position thinking they were going long. And so it's a little confusing. So I'm going to share this little chart with you if you can pop open onto my screen. So I just want to explain what you guys are looking at. First of all, thank you to the user that provided this. It's been a helpful tool to everybody in the chat. But it shows the market. When you want to take a position because you believe the market will go up, that's a TQQQ. All right, now you can do a TQQ call, and that also's up, and you can do an SQQ put, and that's also up. So all three of those, the TQQ by itself, a TQQ call, and an SQQ put, they're all trades that you believe the trend is upwards. And opposite of that,
You guys make sure you take a snapshot of that.
yeah, absolutely, screenshot this. Opposite of that, there is when you believe the market's going down, then that would equal a TQQ put or an SQQ call. So just a quick reference, when the arrow's pointing down, those are the assets you're wanting to enter. And when the market's going up, those are the assets you want to consider entering. I think it's a very nice little gauge.
Yep. So I'm going to make this one very brief because we have a lot of information going on. I want you guys to watch the video that was this morning. A lot of gems. I'm going to leave it actually in a video in this box for those of you that are viewing this on a computer. And then Josh's video will be to your right in this box. I want you guys to view both. A lot of great information.
Very different content.
Very different content.
Yeah, don't miss it.
Yes. So I know you've seen a lot of us today, but we're trying to give you as much information as possible.
Larry, can I jump in?
Absolutely.
There's a lot of new subscribers right now, and I just want to invite you. It's 2023. It's time to get your game plan of investing for all of 2023. There are two links in the description of the video. One is for Moomoo, one is for Webull. If you have an investment account, feel free to open up a trade account. But consider those and getting a fresh start in your journey. And each of them is going to give you new stock. You can start your investment journey off. The Moomoo is going to give you up to 15 free stock and a chance at $60,000. That's for the people who are just getting on. A lot of you guys are already with those companies, and we have there's a connection group in the Moomoo app. But get those if you need them. Both links are in the top pinned comment and in the description of the video.
Thank you, sir.
No problem.
All right. So what I wanted to talk about, because I give you a ton of information, that was the CPI report. What I want to briefly talk about is trading the market you're in. Not what you feel or what you want, but what you're in. 2020 and 2021, in 2021, we were in a bull market.
Yep.
And when you're trading in a bull market, you could just take darts and throw it.
Everybody's a genius.
Everybody's a genius, and you could take 7 darts and throw it, and 5 of them will hit a stock that's going up. It's just the way it is, right? Nothing matters. PEs doesn't matter. It doesn't matter if they have income, if they're making revenue, if they're losing. None of that really mattered. There were companies that were pretty much bankrupt, but they were actually still going up.
Defying
gravity.
And going up multiples, shocking multiples,
aka Tesla. But what happens is in a bear market, which we are still in now, that started January of 2021, of 2022, we have been in a steady decline in a bear market the entire year. And we're still in that cycle. As a matter of fact, the worst to me hasn't happened. We haven't bottomed out yet. And I don't believe we will until after we get Q1 earnings of 2023. I believe we won't get it until then. Now, I can't tell you when the market will bottom out. I'm not Nancy Pelosi. I don't have a crystal ball, but I do believe it will be this year. And I believe the stock market will bottom out before the economy does. And that happens most of the time. Now, what we have to do is you have to go from defensive to offensive. I'm sorry, from offensive to defensive. And so that's why you have stock like oil, stocks like Ulta, Beauty Salon, Walgreens, healthcare companies. Those are the type bonds. Those are the things that are defensive, right? And so instead of trying to trade and chase the next hot thing, now's the time to see opportunity and to start really buying into or dollar cost averaging into long-term investments rather than trying to be a trader. Now is the time where true investors enter in and establish their positions. So one of the things I encourage you to do now is look at your portfolio, make sure it's balanced. If it's just full of stock like Mullen, stock like AMC, GameStop, and that's all you have is meme coins, then your boat is not balanced and it will sink this year. You need some good companies that have a fair PE ratio, that have earnings, that have access to liquidity because higher interest rates, and they have money to make it through the deeper recession, which I think we're entering into. But we ain't scared. We prepared. When these companies become value stock, meaning they are pretty much oversold or the PE is below where it should be, that makes it a value stock, and that's when you buy in.
We're getting close. Yeah, the average PE for the S&P 500 just last Friday, I believe, was sitting at 22.54. And as the market drops, we're getting closer and closer to going under 20. And I think that that's going to be a key mark. Some companies are going to get there sooner than others. I'll be honest with you, Tesla, there are going to be a number of names like Tesla, Amazon, Google that are going to get there early. Then there's going to become some late arrivals,
Absolutely.
Microsoft and Apple. They're going to come late to it. But what's going to happen is that it's not all going to go down at the same time. And then some people are thinking that everything's bottomed, and it hasn't. And then some people think there's room for things to go down further, but they've already hit bottom. So you got to be mindful of that. Larry brought it up on his page. I watch his page all the time, and he has been saying consistently in the last couple of weeks that he is trading the PE, not the price.
Yes.
And that I believe is a gem for a lot of people. Take seriously. And it's not hard, guys. If you got a company and you're like, what's the PE? Just Google it. Say, you can Google what is the PE for Google, right? And it'll pop right up. You don't even have to read an article. It'll give you the data. And if it's below 20, you're probably in a safe place to consider nibbling. If it's above 20, then you keep an eye on it.
Right. And a good fair PE is 15, right? That's just an average, right?
Yeah.
And so let me show you guys.
That's a lot of different companies. That takes into consideration the growth and the large cap stocks that are not growing.
Exactly.
So 15, probably not going to get, and you're never going to get an Apple at 15.
No, because you got to compare it to a company that's like it. So if it's tech, compare it to other tech companies. That's why companies like Tesla is so hard to put a PE on, because it's a car company and a tech company. And so it skews the line. And so just here, look at here. So if you go, this is Google, right? And all you got to do is put in www.yahoofinance.com or Google or whatever, Google Finance, and you see the PE is right here. See here, PE, PE ratio, price to earnings. And here, Alphabet Class A is 18.39.
That's even come up.
It's actually, yes. And so that's what we want to show you guys that are beginners and know that it counts this year. It didn't count in 2020, right? They were just ridiculously, these companies had ridiculous valuations, but they are coming down now, including companies like Apple. And like Josh covered in his video, which will be here, and I want everybody to watch it, that it is very, very important to keep your eye on these data points so you can win this season. Anything in closing words?
It was well, no, Larry. I think you covered a lot. I want to give you one last tidbit. We're doing this is the beginning of January is an education time to dive into research so you can take advantage of the big moves later in the year. I just want to give you another scenario that you can do. If you want to just do some basic research on these stocks, you can search what sector is Google in. So say, okay, what sector is Tesla in, right? It'll give you the sector. Then you can search what is the average PE for that sector.
Very good
okay?
advice.
And then you can compare the two and you can see whether it's still expensive or whether it's getting cheap.
All right, good people, we're going to leave it right there. I went to sleep around 12 and got up just before 4. I'm wasted. We've been at it all day. I appreciate you guys for tuning in. Make sure you hit that like, subscribe, notification bell. Check out the 2 links below. Download them. Deposit $100 in each. We'll see you tomorrow. Live, love, laugh, and learn.
Peace and blessings, my friends.
Peace.